I point out in the book that if you had taken that $700 billion that went into TARP and used just a fraction of that to create a new institution to provide money, say, to small and medium-sized enterprises, we would have had a flow of new credit that is so essential to getting the American economy going again. Instead, we focused on the past. We focused on institutions that had proven themselves not having done a not a good job in allocating capital. They're focusing on dealing with past mistakes. And one of the basic lessons in economics is bygones should be bygones. And unfortunately, it's very hard to get existing institutions to do that. And that was just one, it was a way of thinking about what we might have done that would have...
So it wasn't so much a prescription for the future. It is looking at the past and figuring out something that might have been a better way to go about solving the problem.
Exactly.
But how about nationalization? Do you think we should have had more nationalization, as your Nobel colleague Paul Krugman suggested, even if it was temporary?
That's not the word I would have used. I would have used the word conservatorship. I would have said playing by the rules of capitalism. Yeah. The rules of capitalism say that if somebody owes more money than they can pay, a firm owes more money than it can pay, it goes into bankruptcy, which means the shareholders get wiped out, the bondholders become the new shareholders. That's the rules of capitalism. We suspended those rules. Now, in the case of banks, there's a couple of particular provisions. The first is that you don't wait until the company is absolutely bankrupt before you do something. You want to make sure that you're not left holding the bag. And secondly, the government has a special role because the government insures the deposits. So if it goes up, belly up, the taxpayer, FDIC, winds up filling the hole. And that gives it those are the only difference between that and ordinary bankruptcy. So that's what I wanted them to do. If they had done that, they would not have needed the huge amounts of taxpayer money.
You think they'll get some of it back?
Oh, they'll get some of the money back, but the numbers look like very clear that there will be a significant shortfall, over $100 billion, and most of those calculations do not really talk about appropriate compensation for what we call the time value of money, the risk that we bore. And so when you say we got the money back, we should have gotten far more than the money back given the risk that we bore.
You have an international reputation, are known well around the world, and with admiration. You also saw the kinds of factors coming together that created the crisis that we had to go through. Do you believe that if you had had power to go with your observation, you would have been able to prevent the crisis?
I think we could have made sure that it was much less deep than it currently is. We might have been able to prevent it. And why that's so relevant to the current policy debate is that right now our financial sector is in some ways more dysfunctional than it was in 2007. And so as I look at where we are, unless we make some very significant reforms in both the structure of the financial sector and the regulation of the financial sector, I think there is a significant risk that we will sometime, 5 years, 10 years, face another crisis of the kind that we've just been through.